Okay, continuing on the summary of REQ Capital's deep dive into serial acquirers. Here on the screen is a list of the specialists and generalists serial acquirers from the whole world. So we're not talking just specifically the Nordic countries now. Now, I'd actually recommend pausing it at this moment to have a look through this list in detail because there's definitely some businesses you are not familiar with. I'm not familiar with many of these. So this was really cool, this list, to give me a bigger universe to start looking into. And of course, there's the ones that I'm familiar with and even invested in. For example, Kelly Partners Group, what SDI Group is in there as well. Jigen out of Japan is in there. TerraVest Industries. I've invested in all those four anyway that I can see just now. But yeah, this is a pretty interesting list. Highly recommend going through that in detail. Okay, now this slide I think is interesting for two reasons. One is that it kind of feels like economics back at school. It seems all theory and you got to get your head around the theory when you're making an investment decision, but things don't fit in nice, neat little boxes like this. This is just not how the world works. So don't get too wrapped up in these graphs and pictures and buckets that things are getting put into. I think it's a waste of time. I think the summary of all of this is this: do small, frequent deals if you're a serial acquirer. Build up your best practices and get stronger at acquisitions over time. That's how you get this ball moving and this snowball rolling down the hill. But you have to do small, frequent deals because that's where you're mitigating risk. That's where you're doing all the learning. And if you're just doing big deals less often, you've got just higher chances of blowing up. Okay, this next bit of information is really interesting. They've done a study in 2022 showing going on about 1,000 serial acquirer businesses, and they looked at the insider ownership proportion compared to traditional businesses that make just occasional acquisitions. Like they might make one every couple of years or something like that. Acquisitions aren't, even though they bump up the business quite a lot when it happens, they're not focused on acquisitions. And the difference, so we're just showing the difference between the focus on lots of small acquisitions as part of the business model compared to operating a business, a traditional type of business, and then occasionally making acquisitions. And the insider ownership difference was that the serial acquirers that do these small frequent deals on average have about 10% insider ownership, and the occasional ones have actually 5% or less as the average insider ownership. So I think that just goes to show that when we're looking for serial acquirers, that you're generally going to find high insider ownership as well. And for me, I really like to see that. Again, this is a study of 1,000 businesses, so some of them are going to have, some of the best serial acquirers are going to have low insider ownership, and some of the best traditional businesses that do occasional acquisitions are going to have really high insider ownership. But the numbers average out to be 10% on average for the serial acquirers, 5% for the traditional yet occasional acquirers. I thought that was interesting. Now, if you're really into serial acquirers like me, I put out a free email once a week where I track what I think are some of the best serial acquirers out there, and I'm doing an updated valuation each week on that. It's free. It's an email, and the link is in the description below. Join that if you wish. Okay, this graph is intense, and I could spend a lot of time talking about each individual business here. I'm going to just put it on the screen. We're going to try to focus on just a few of the businesses. Yeah, I know it's a little bit hard to read. It's quite small. We'll zoom in here, and it's just very interesting. This is talking about the financial targets. So what is the business, the serial acquirer, what are they focusing on? What are they explaining to shareholders is their most important metrics? So let's just pick one randomly here. AdLife, for example. They're focused on their target is to have EBITDA greater than 15% per annum and return on working capital greater than 45%. They also have a dividend policy of between 30 and 50% of net profit. So that's their financial targets that they're telling people. As you can see, actually, there's probably more than half have a dividend strategy of some kind, which I find quite interesting because I would argue that, well, if you have a dividend target like this, you're kind of handicapping yourself if a really interesting, a handful of deals come on the market all at the same time. Well, wouldn't it be nice to have that cash available to you? If you had this target and you're like, oh, sorry, this time we're going to have 0% dividend because we want to go make all these acquisitions. But you've told people over and over again that we're going to target this range in between 30 and 50%. You're kind of going against your word. I don't know. I think they just shouldn't have a dividend policy at all. But anyway, businesses like to do that because they think investors like dividend policies. So I whatever. Do I think it's detrimental to the business? Well, not really. Lifco, for example, they've got a dividend policy, and it's one of the greatest investments on this list. They've got a target of their profit growth to be, the EBITDA has got to be greater than GDP, which is, quite a reasonable target to be aspiring for. And their return on capital employed, their target is to be greater than 50%, which is very impressive. And I think it's actually good to see not just Lifco, but most of these businesses here have a debt metric that's important to them. So Lifco, somewhere between 2 and 3 times is sort of their target range. A lot of businesses are like less than 3 or less than 2.5 or something like that. I think that's good. You don't want debt to get above 3. I think that's starting to get a little bit on the riskier side. It can pay off, obviously, because earnings can grow into the future, and then that debt number looks a lot less. But it's also how businesses can blow up if they take out too much leverage. So go through this in your own time. There's a lot of very interesting businesses here, and you can look through. This is fantastic work. You can go through all the financial targets for each one of these businesses and see which ones align with you. Do you like having sales growth targets? Do you like having maybe profit growth is better than sales growth targets? Maybe you prefer them to just focus on margins. Maybe you prefer them to get this return on working capital like ad tech and ad life, or maybe you want them to focus on a return on equity metric or something like that, or even the dividend policy. I don't know, but I think this is an awesome piece of work. Well done, REQ Capital. And the big takeaways from those financial targets, I think, are really critical to get your head around. So the findings from the study is that there's actually no correlation between how companies use financial targets. There's no correlation. Like the ones that performed amazingly well had no similar targets, or it was just all different. Another finding from this work is that companies with longer track records seem to have dividends in their financial targets. Like I said, debt is definitely one of the most popular financial targets to be communicated. There's only 2 companies on that list, apparently, that measure sales and profit growth in terms of per share numbers. That's Volati and Vestum. So then you've got companies like AdTech, Lagercrantz, Lifco, Indutrade, Bergman and Bevan. They don't communicate financial targets per share, but they do not issue any new shares either. So they don't feel like it's necessary to do that per share. I think that was an interesting takeaway. Now, if the time has come for you to actually make an investment in one of these businesses, or you got a brokerage account, but you want to get access to some of the international markets here, like the Scandinavian countries, Australia, Japan, you're going to need a broker that can do that. Interactive Brokers is what I personally use. It's exactly how I invested in some of these companies. And there's a link in the description for that. Highly recommend. Best broker in the world. Okay, hope you're enjoying diving into serial acquirers with me. I love this stuff. We'll keep going in the next episode.